Hi everyone. Hello. Pleasure to be here and to moderate this panel on real-world asset. I would like to kick this off with a brief introduction of our panelists. Ksenija, you want to go first?
Yes, sure. Hi everyone. It's a pleasure to be here at ETHMilan. My name is Ksenija and I work at Obligate. Obligate is a Swiss company that is specializing on-chain bonds.
I'm Matt from xStocks. We basically tokenize US listed stocks on-chain, and I do BD there, mainly for all on-chain stuff from wallets to protocols to new chains.
Hello everyone, my name is Francesco. I work for Tether. We built our tokenization platform, which is called Hedron, and we use it to tokenize pretty much everything from stocks, bond, money market fund, our stable coins, and everything. Thank you.
Hello everyone, I'm Silvio. I'm from Aktionariat. We are the leading tokenization provider in Switzerland with over 90 companies, non-listed companies that we bring on-chain. And the idea is that people like you and us can invest in Swiss-based companies and potentially in the future also in all Europe.
Thanks so much. A word about me. I'm Giorgio, Lombard Notes is my blog, and I'm here because I've been leading the product at xStocks for many years before we got acquired by Kraken. So I was virtually a colleague of Matt for quite some time. And yeah, well, I think we should kick off with our question. The first one, it's kind of a generic question that I would like to ask to everyone. And so it's about the general topic of tokenization. So tokenization has been around crypto conferences for almost a decade now, since Larry Fink from BlackRock said the future of finance is tokenization. Then in every crypto conference, there is a tokenization panel. If you look at numbers, we have around 30 billion in total tokenized between gold, commodities, equities. So xStocks is the biggest, one of the biggest equities provider on chain, did 500 million TVL max, which is 0.001% of the wider US stocks market cap. So the question is, where is the killer application for tokenization? Where the killer application for tokenization come from? What is going to be either the asset class or what is going to open up the avenues for massive growth and mainstream growth? Who want to go first? Francesco?
I can take it.
Yeah, go.
I think that today, like 99% of the tokenized assets are for institutionals, and that is, that is pretty obvious. I really think that in the near future, tokenization is gonna really start as a rocket, but not for the assets that you think. So not only, at least for stocks or retail assets. An asset to be liquid has to be useful because the liquidity follows the utility. And I think the most useful asset today for tokenization are like money market funds, yield-bearing tokens, and because they can be really used in DeFi or in traditional finance as well as collateral, like repo, 24/7 between banks. So I really think that is the killer application for tokenization nowadays and in the close future. It's going to be driven by institutionals and less retails. And I really think that more and more institutional firms are joining this ecosystem. As we were discussing before, actually, and I was in another conference a couple of weeks ago, and at my table there were only, like BlackRock, JP Morgan, Morgan Stanley, only these kind of companies. If you went to these events like 5 years ago, 3 years ago, you didn't find any of them. So the institutionals will drive, the adoption of this asset because it's useful for them.
Excellent. Matt, you want to go next?
Yeah, sure. So I agree with Francesco's point because the real big capital is in the hands of a few major institutions. Like BlackRock, I think, handles more than $10 trillion in AUM. And And also, I agree with the point of, certain assets, especially, yield-bearing ones like treasury bonds, are among the most, let's say, almost perfect RWAs, because they can be used also to create structured products such as, for example, stablecoins that can actually give a yield back to users. They're basically like cash instrument that can actually also give some yield to the users, while right now if you put your money in the bank and you don't put it in a deposit vault or whatever, you're getting 0% and you're being eaten day by inflation. And also, even if you do, it's gonna be like what 2%. So it's definitely like the opportunity of having a bigger sector in terms of RWAs is an opportunity to create a more efficient and meritocratic system that rewards a lot better the risk, because of the good things that tokenization and I must say also DeFi brought around with, the cool things that happened in the past few years.
Ksenija?
With regards to the use case, I would say the tokenization of corporate bonds of mid-sized companies. Why would I say that? Yes, because Obligate does that, but also because this is the area where traditionally the processes have been very expensive, very long, and in principle, very inefficient. And the issuance of on-chain bonds, on-chain corporate bonds, is solving that problem, because traditionally you would need around minimum of the 9 months for the issuer to issue such bonds. There would be a rather high minimum size, and also the consortium of banks would be charging lots of fees on every single step of this process. While if the corporate bonds are issued natively on-chain, as we do with Obligate under Swiss DLT law, that is making it much cheaper. Then the question is, what do we need for this use case to pick up? And in principle, for the use cases of tokenization to pick up, I would say there are two prerequisites, two conditions. One is that the securities that are being tokenized should actually be tokenized on-chain natively and not be wrappers. Maybe, well, hopefully that is going to happen soon. And I think this is very realistic. And second of all, we already see that the institutional capital is moving on-chain. We see this trend definitely. We at Obligate see this trend definitely, because I can say that last month the volumes, the transactional volumes have surpassed 200 million, and that is quite good, taking into account that we have, let's say, a rather niche product. But what does it take for institutional capital to accelerate this movement on-chain and to remain there? That is, I think, more delicate question, or is a question that has more answers than one, because that is the question of institutional capital feeling safe on-chain, feeling that if something goes wrong, it can be fixed in a compliant, regulated manner, and also feeling that it makes sense commercially, and it is also safe and secure to do so.
We can discuss that later on with another question that we have already. And Silvio, you want to close the restaurant?
Yes, of course. Yes, I'm just for my part, equity part. In my view, what it needs, it's of course institutional players that are coming in, but not to provide liquidity also, but to provide the possibility so that people like you and I can easily invest through the e-banking without the need of a wallet. Because what we see from experience, every week people lose the seed phrase, and then they ask us if we can send them the seed phrase, and we say no. It's things like that. So it's also about education, possibilities, and I think most of the people, at least in Switzerland, they trust their banks and they want to invest in Swiss-based companies according to the legal framework without the need of any wallet. And in my view, this will be the killer application for adoption.
Democratization.
Democratization, yes. We are for the smaller people, for the founders here, not for the institutions.
Okay.
Can I add only one thing here? I mean, I agree with what Silvio said. Just want to say that in the world, like of course I'm talking about USDT, but in the world there are more than 185 billions of USDT worldwide, and the majority of them are in LATAM, Africa, and Southeast Asia. So, I mean, I agree that we need to cover like the retail side as well, because these people want to invest, their reserves. I mean, they have USDT, they don't have a bank account. So, I mean, we kind of live in a bubble. We have bank accounts, we can invest our money in stock, bonds, financial instruments. They can't. So we should at least what we are doing is to target that areas, because the liquidity is there. It's already there. They're just waiting they're waiting there to find the right product to invest their money, because they want to have our chances to invest their money. And we cannot sell the ice at the North Pole, because in Europe there is not a huge demand for this stuff. Actually, for retails, whoever bought a tokenized bond here among you, I guess nobody, and you are crypto people probably. But if you go to LATAM, Africa, and Southeast Asia, they really need to. So for retails that are the main areas, I'm just looking at the market, the USDT are there, the measure of liquidity is there.
Yeah. No, I mean, of course, there are jurisdictional arbitrage to be executed, but from what you said, I think it's clear that the drive to the next wave is going to probably be institutional and institutional capital. Retail, it's one of the use cases of decentralized finance, but I'm not sure if it's the one that is going to drive the mainstream adoption. And I mean, but we have other questions, so because if we stay here, it's going to take 3 hours probably. So the second question, it's more, I mean, on tokenized equities, but basically on the nature of tokenization. A token is essentially a technological wrapper that gives the holder of the token exposure to an asset. What makes it powerful is the legal bond. So if there is a legal infrastructure that says this asset belongs to the token holder, and there must be a law or a legal framework that guarantees that. Tokenized equities, mainly xStocks and Robinhood, they have specific legal setup. They don't give voting rights, for example, on the companies that you have equities of. So this kind of setup may not be very, very interesting for certain type of investors, like institutional investors in some cases. Do you think that this is going to be, and this is mainly for Matt, do you think this is going to be a blocker for your growth?
I don't think so, but I mean, there are a few things to discuss here. First is what do you think is going to give the most value in a tokenized asset? For the people, that just to get back to what Francesco was saying, for a lot of people in LATAM, in Asia, it's about access. I was talking with a guy from Hong Kong, and he told me that a regular person in Hong Kong to open let's say, a brokerage account and trade US stocks, it's just a dream. Right? And it's also like that in LATAM. There are lots of developed Asian countries that make it really hard. So one thing is access. Another thing might be 24/7. I mean, after tokenized stocks, basically NYSE and all the other exchanges started discussing 24/7 trading. After we came around with all this kind of, let's say, it can be called wrappers or tokenized stocks, and there is also the part on composability in DeFi. And one other thing, and I'm not diving deeper into that because it's mainly access to more yield, more opportunities, and then there are voting rights. In this case, what is going to an institution? What is going to focus on? There are lots of things, not just voting rights themselves. It's not to, let's say, cover my ass just to say, but it's something that can be definitely solved pretty easily. For example, it is in the focus of ours, but at the same time, Ondo, that is our main competitor, rolled out this this feature with proxy voting. So, like, do you think is enough? Do you think is too little?
You shouldn't ask me.
No. It's just a general question. I'm looking at you because you posed me the question. But it's like, is it too much? Like, is okay? It is too little. And we dove deeper into that, and it's not something that requires billions in capital or special, regulatory requirements, because Kraken is one of the most regulated CEXs in all crypto, right? So if we want to do that, we do that. But what is the pro like of that? And we saw that we expanded a lot with certain products. Can be also like stretch, where you like the exposure is all you need, right? Because you're getting like a 12% yield on your preferred shares, like of course tokenized, not the preferred shares themselves. But, and just as a quick note to close here, we pass on the yield. Like this is another thing that xStocks enables. So yeah.
Very good question. Does anybody want to say something on this point? We can move to the next one. Okay. So around real-world asset and tokenization in general, another big trend has been this is going to unlock liquidity. Like everything in tokenization unlocks new liquidity. But the reality is that liquidity is a kind of synonym of usage and adoption and interest in a product. So this is for everyone, because you are all selling tokens to an audience, but
we're tokenizing, we're not
exactly
selling.
yes. I mean, like you're selling in the end. Where is this liquidity coming from? Where is this new wave of liquidity coming from for this kind of assets, for your bonds, for your shares? Is there like a liquidity avenue that traditional financial people have not seen, or like would you elaborate a bit around this? Ksenija, you want to go first?
Since you're looking at me, of course, I'm happy to elaborate on this. I think to answer this question, I need to give you a couple of words of what Obligate has started with. We've started with the primary market. This is what we have had all this time, and that means that on the one hand side, on our platform, we have the issuers, that is the corporates that are issuing the bonds under Swiss law. And on the other hand, we have the institutional and qualified investors only. That has been how we have been doing this for a number of years. Why? Because the products that we were issuing, they were not for retails, not for public. They were not available. And so you could say that the democratization part was not there. How we were doing the liquidity part of it, well, let's say with every single product, so every bond had also the possibility of early redemption. That means that the investor would inform the issuer through the platform that they would like to redeem early, let's say with a 7 days notice or 2 weeks notice. That depends on the product, depends on the issuer, and then the issuer is prepared, of course, for a small fee to redeem early. That has been so far the process or liquidity question for us, or liquidity answer, but that you could argue that this answer is not ideal or not perfect or can be improved. And how are we doing this now? And I'm actually really happy that you're asking me this question now and not some 2 months ago, because that would be it. But now what we are doing is we are bringing one of our products on DeFi. And that is how we unlock the secondary market, because we are putting it on a DEX, on Uniswap. That means the access to the product that is institutional grade to the retail clients that has not been there yet before, not at least for the products that we are issuing. And also, second part of that is also the lending protocols. This is also where our RWA tokens, yield-bearing fixed income corporate bonds are going. And this is going to happen hopefully in June if everything goes according to the plan. That's how we tackle liquidity.
Cool. It's amazing that you can buy like institutional grade bonds on Uniswap. It's something that 5 years ago would have been like a dream for like crypto fanatics.
Exactly. That's why I'm so happy to answer this today, because otherwise I understand how it would sound. 7 days notice and only for institutional qualified investors. Is that really revolutionary? No. But now we are moving to the place where where I'm feeling proud of what we are building.
Francesco, do you want to say something?
I really think that like DeFi is going to play a key role here, because as I said before, for some specific asset, if they are, I mean, useful for this industry, in DeFi can be even more useful because you can really unlock liquidity, you know, with lending protocols, etc. I see this both for institutionals and for retails, for both of them. Depends obviously on the asset. And obviously, like a key role on the liquidity side is played by the market makers. I mean, like many of them are moving from the traditional finance to the crypto space because they saw that there is a lot of liquidity here and they can make, I mean, actually a lot of money. So they are putting liquidity in, you know, RWA projects, etc. But the liquidity is already there because, as I said, it's not only Tether but our competitors as well. There is a lot of liquidity on chain. It just have to be bridged to the, I mean, to the tokenized finance for this kind of products.
Silvio?
Yes, so at Aktionariat we give the possibility to companies to have a primary market to, you know, mainly to raise capital. 99% of the people investing through this primary market, they invest bank transfer, we're a leader in crypto. Now in Switzerland you have a unique opportunity to have a non-commercial secondary market with some limitations without market makers, and then we have the problem of the liquidity. Who is providing liquidity and how? And for this we are using the Frankencoin. It's the stable coin, the most decentralized stable coin, Swiss franc stable coin. You should check it out. Yes, and we are using the Frankencoin. But here the problem is it is still too difficult for normal people to buy a stablecoin because they need to log in with the wallet and so on. And the people that we are helping are very traditional people. Maybe they have the first investment, it's in this private equity that they did not even invest in, I don't know, in Nestle or other companies that are publicly listed. So, and this, what we see, it's still a problem that liquidity is not yet there. But I think as soon as you have this part that user don't need to understand, now I need ETH to transfer the token and so on. So it's more sophisticated so that people don't even know that they are on chain. Then it's coming more liquidity, but of course never like the volumes that xStocks or with market makers on the regulated secondary market. It's never like this, but
No.
For now.
For now.
In the future, yes, maybe.
Matt?
So very briefly, it's incredible that you know, we're talking about RWAs, and for this question we basically like all said DeFi. So that's really telling, and I must say that xStocks went big in DeFi. I was involved into making us launch the first tokenized stocks on Pendle with Stretch X. And also to be the ones that are now on Jupeland, on Camino, on Euler, and on Morpho, which are basically 4 of the 5 biggest lending protocols in DeFi, with a compliant infrastructure behind our tokenized stocks. And I think DeFi is going to you know, bring some surprises also for the future, more structured products, more scalability. The big problem here is the liquidity, the underlying liquidity to support these markets, even in DeFi even more. That's why we launched a fast tokenization engine that is able to enable up to $1 million clips per swap in from USDC to any xStocks, sorry for the USDC part, and but I think that's a very important vertical for us, probably the one I believe the most, but I think is going to be very pivotal. And also high net worth individuals want more from their capital. We had lots of requests of that kind, and we are onboarding some of them. So that's going to be a very interesting market that probably some people is underestimating at the moment, especially, you know, also the family offices, all these small funds that need to diversify their capital. They need to find frameworks that work and that give a certain interest per annum.
Okay, thanks a lot. Moving to the next topic, which is about essentially regulation, which is key in this. I mean, it's becoming key in the whole crypto space, but more than the others in real-world asset. Talking specifically to Francesco and to Tether and to Darren. So if you look at your stack in general, it's very sophisticated, very well thought. You have KYT, you have a number of things that are, in my opinion, superior to any tokenization platform around. But on the other side, Darren is a platform owned and created by Tether that is not the most regulatory friendly stablecoin in circulation, right? You don't have a MiCA license. You're getting out of certain EU exchanges. So the question directly is there any friction between these space that is very regulatory oriented and Tether that it's not perceived as such by the regulators?
I mean, I totally understand the question, and it's pretty obvious that like institutions are wondering these things. Actually, regarding Tether itself, I think that Tether is really one of the most stable companies in the world since I mean, I think that history proved that when there was like a let's say a mess regarding the FTX, etc. We really did a great job in that occasion. In terms of compliance, yeah, we decided to, to didn't follow, MiCA in Europe. And but one thing is Tether, USDT, and another thing is Hadron and the infrastructure system, because Hadron is an infrastructure layer, is a product, it's a platform as a service. Is used to issue actually some very, very serious tokens. We just launched with Hadron USAT, which is a fully regulated stable coin in the US. We were fully audited, we are fully compliant, we offer KYC tools to our client, we closed a partnership with chain analysis for the KYT as well. So I don't think that there is any friction between the two things. I understand that like institutions could be could ask these questions, but no, I don't think that there is any friction.
Totally fair point. So we're gonna have a last round, and then I would like to leave the floor for a few questions from the audience if you're interested. Otherwise, we will wrap it up. So the closing round is basically with I would like to looking at the space, looking at the real world asset space and tokenization in general. What is the development, the one development, either a new asset class, a new feature, a new regulation that you think it's not priced in, so it's underestimated by the market, something that in a few years would be obvious, but now it's still a hidden trend or not very visible trend, if it exists. Of course, you can say it doesn't really exist. So is there something that people should explore more and look out for a bit more? Ksenija, you're always the first one, sorry.
That's fine, I like to be the first one. Actually, I even think that the answer to this question would be similar to all of us here on this panel from what I heard the answers to so far, and that would be RWAs going to the lending markets. Because that is then using RWAs as a collateral on the lending protocols, and then by this means unlocking the liquidity of it is one great trend that I think everyone here mentioned on the panel. And maybe another one is RWAs. What is so beautiful about them, that is the quite often the yield that's not correlated to crypto markets. And as we have seen the crypto markets, not even recently, but for a long while now, the yield is not coming from the cryptos themselves. So when the yield that's coming from real-world assets, that's coming from the commercial activities of real companies, for example, is then being used on the lending protocols as a collateral, and it's definitely going to be accepted by the lending protocols with open heart and open arms, due to the fact that it is fixed income. It is way less volatile. It is something that's very predictable. When it comes to bonds, you know exactly when next coupon payment is coming. You know exactly when redemptions are coming. That is the trend that I think is going to be dominant, or is going to be less and less hidden, or more and more obvious with the time.
Matt?
I think something that is underestimated right now is how well the tokenized assets could blend with traditional finance products. I mean, like, if you go on interactive brokers, etc., I firmly believe that one day you'll be able to earn on top of your stocks. You'll be able to, with one tap, use a structured product within DeFi that uses DeFi rails. And I think, yeah, these kind of platforms and tokenized assets are able to interact with each other is, in my opinion, underestimated at the moment. Still needs some development, but I think it will be a huge trend once the full potential of these assets will be uncovered, with, of course, something that will be impossible not to notice, even from big players.
Francesco?
I think that one thing is, companies, people, retails, everyone today doesn't understand how much liquidity there is, out there, and above all, again, in DeFi, big companies are not understanding that they really can use these products. And it's not different between using a tokenized deposit, a tokenized asset, rather than a financial product. You don't even have to know that that product, that asset is tokenized. You can use it as collateral in a much easier and useful way than a normal classic product that you use now. I really think that in 3-4 years, probably, like, most of the assets are going to be on-chain, tokenized, and all of you are going to buy tokenized stocks or bonds or asset in every single platform. And the companies, the banks, the financial institutions that are not gonna surf this wave are gonna, catch it in the face. So yeah, I think that everyone should surf it.
Silvio?
Yes, from my side, I take a little bit of everything, and I would add that yes. In Switzerland, for example, we have 110 stock corporation, and most of the stocks are in an Excel file. So it's a pity. You should use it. And with the Frankencoin protocol, for example, you can use tokenized stocks as a collateral, and then you get the loan. Things like that will be more common as soon as the user interface allows it. So I think there it's a lot of potential, and also with the regulation, for example, in Switzerland, 2027, there will be a transparency registry. So it means that shareholders that have more than 25% of a company need to be reported to a centralized part. Don't ask me if it's good. I'm against this stuff, but anyway, this is coming. And then one part will be that when you transfer the shares, it needs to be auditable. Now, if you do it traditionally, you need to have legal documents signed by pen and so on. And there is an opportunity if you do the transfer on-chain. It means that you don't only provide the rights and obligation as a shareholder, but also the ownership. And in Switzerland, if you have this in all Europe, then this would be something that could change. Yes, but it takes much more time.
Okay. Thanks so much. So our friends from ETHMilan told me that the time is over. So if you have questions, you can ask them later. I want to thank Ksenija, Matt, Francesco, and Silvio. And yeah, if you're around, we'll see you later.
Thank you, guys.
Thanks a lot.
Thank you.
Thank
Bye.
you.